Welcome back, and having heard from Shay Russell, Fat Tail Media, and all of her predictions of what's going on and what she thinks of Evolution, I now have the Executive Chairman of Evolution Mining, Jake Klein, joining us. Jake, thank you so much for your time because you're running a big operation. I know how busy you are. Much appreciated.
Flattery will get you every week, Kerry.
Excellent. Love a bit of flattery. See, there we go, ladies and gentlemen. Jake, you've been a long time in the gold industry. There's a lot of interest now going into mainstream media. Everyone's talking about gold and silver. Evolution Mining have a number of assets in New South Wales, Queensland, and more recently Red Lake in Canada. Do you think price is driving the interest in gold? We've got a lot of listeners today on the program that don't really understand gold equities and why they should potentially look at a company such as Evolution Mining.
I think, Kerry, you've got to think of gold as a currency. I've always been a believer that it's not a demand and supply story. It's a currency story. So if you think about all the challenges which fiat currencies are confronting at the moment, and they're real. You know, the COVID pandemic has meant that unfortunately governments have had to roll out these stimulus fiscal programs. In Australia, we've got the JobKeeper program, unemployment's rising, and then you've got an overlay of real geopolitical tension that you haven't seen in the world for a long time. You know, this increased tension with China is concerning and should be concerning to investors. So you've got the monetary, currency issue and stimulus programs, which is creating a huge amount of debt. I saw in some news media this morning that the U.S. balance sheet, the Fed Reserve's balance sheet is growing by $6 or $7 trillion this year. These are incredible numbers. So who's going to pay this back, and what currency as an investor do you want to be invested in? And a lot of people are saying, well, be in the one currency that you can't print, and that's gold. And that's why I think there's this growing interest in gold.
That's a really great explanation. And for the people out there, that's exactly right. There is so much money printing. I call it currency printing. I actually call gold money. Everything else is credit and it's fiat currency.
That's a good capturing, I think, of what is driving the interest in gold at the moment. But I do think these political tensions are real. I spent a lot of time trying to build gold mines in China some time ago. There are no foreign operators of gold mines in China anymore, and that demarcation between China and kind of liberal democracies, Western democracies, seems to be growing.
Yeah, I agree with you. And that brings me nicely onto what's happening right now. As I speak to you, it's Thursday, the 20th of August. We're in the middle of a pandemic. COVID is all around us. Is COVID impacting any of Evolution Mining's operations? You've got some in Queensland, some in New South Wales, and obviously the newest acquisition, Red Lake, over in Canada. How are you managing in these challenging times?
Don't forget about our one in that, do we have to call it a state still, or the country of Western Australia?
Yeah, he's got Macquarie in Western Australia as well. What a whole WA, we forget about them.
So, yeah, I mean, look, it's relative to other sectors. We've been fortunate. We've focused, as you say, in tier one mining jurisdictions of Australia and Canada. Both of those countries have managed the pandemic well to date. Mining has fortunately been declared an essential service in both of those countries. So we have had preferred access to our sites and things like that. And we have not been impacted to date. We've managed it very effectively within Evolution. We've got strict protocols, trying to contact trace, ensure that people who are coming to site are clear of the disease. And we have had no impact on our business to date. We have had no one infected with COVID, fortunately. But it is an ongoing thing. It's caused some inconvenience, but some of our general managers may say that their operational performance has actually improved because I haven't been able to visit.
Yeah, you certainly can't visit WA at the moment.
No, that's off limits.
Look, you've recently announced your financials and dividends. And for those of you out there because I know some of you love a dividend. Guess what? Evolution Mining pays a dividend, fully franked. I think 16 cents this year.
Yeah, so we've paid our 15th consecutive dividend now. So yeah, that's an indication of the type of business we're trying to build. We're trying to build a business that will prosper through the cycle. So I think in 2015 we paid 2 cents a share. Now we're paying 16 cents a share. We're targeting 50% of our free cash flow a year, and we've positioned our portfolio into one that is highly profitable. We're obviously benefiting from this gold price at $2,700 an ounce. And that shareholders ought to benefit as well. So who would have thought that a gold company like Evolution could be paying a yield of close to 3% fully franked? And again, it goes to your earlier comments about the money printing and interest rates being close to zero. Gold is a very profitable business, and at these rates, which are, our gold was sold at $400 lower than the current price in the last financial year. So we're making lots of money.
Well, and on that very note, I know that one of the things that you focus very much on is the financial discipline across all of the assets, whether they be in WA or in New South Wales or Queensland. Tell me about how, the financial discipline, because we know that for some companies that is not such a focus, but for you, you're always focused on the shareholder and shareholder value. Given what
ultimately we're a business, it's up to investors to decide whether they want exposure to the gold price. What we've got to do is make ourselves the preferred destination for those dollars that are seeking exposure to gold. And I strongly believe that requires us to be a profitable business through the cycle. When there are good gold prices, we need to be making super returns like we are now, paying that out to shareholders. But there needs to be a discipline around the fact that we're really custodians of our shareholders' capital, and that needs to be invested and get appropriate returns for that money. Mining is a business with risk in it, and we need to get good returns for that money invested. I think in the past there's been too much of a boom-bust mentality in the gold sector, whereas the gold price goes up, people are making investments and providing capital on the basis that it's going to go up further. Now, I hope that's the case. And if it is the case, Evolution will be making even more money. But if it doesn't, and it just stays at these levels or even goes down a bit, we'll still be very profitable and still be paying dividends, 15 consecutive dividends, and making lots of money. So we believe we should look at it as a business rather than a commodity play. That's because that's the investor's role. It's the investor's role to decide that they want exposure to gold. It's our role at Evolution to make sure we produce the gold as safely, efficiently, and profitably as possible.
Jake, speaking of producing gold, I'd like to just move on. We can't cover all the assets. We don't have enough time. But if I could just focus on two. First of all, one in New South Wales, which is your Cal operation, which you bought in 2015. You were the highest bidder at the time. And I believe it was larger. What you bought it for was more than your market cap at the time. So a gutsy move back in 2015. How is it going? How's I think you're going underground shortly. Just tell our listeners about that.
Yes, Cowra was a mine that was bought from Barrick in 2015. As you say, we were the highest bidder. We had some investors saying, gee, you've overpaid for that, as you always do. And when you sell something, they always say you sold it for too little. But I think our positioning has been a portfolio approach, always trying to improve the quality of the portfolio. So since we've been formed, we've sold 3 assets, we've acquired 4 assets. We only have 2 of the original assets in our portfolio still. So we're very much focused on improving the quality of the portfolio. And when Cal came around, it was one of those ones where you don't get an opportunity to acquire a world-class mine often from a major that was tendering it for sale. We bought it, we stretched, the mine was meant to close in 2024. It had 1.6 million ounces in reserves. We acquired it. We've produced 1 million ounces from there already. We currently have a reserve base of 3.9 million ounces. This is an asset which was kind of not focused on within Barrick. Barrick probably made the decision to start exiting Australia in the early 2010s, and Cowra was sold in 2015. So it was the last asset within Barrick's Australian portfolio by the Super Pit, their share in the Super Pit, which was sold. So I think there was a sense on site that it was an asset that was up for sale. It didn't get any real traction within the Barrick portfolio. I think Barrick had 26 assets at that point in time. I remember looking at a presentation they did at a conference. They had, I think, 50 pages of presentation, which is too long for any presentation.
Yeah,
but Cal, I think, featured on page 48 for 2 lines. And that's the sentiment that was existing on site. You know, we're not very relevant. Suddenly a company like Evolution buys it. It's the biggest thing in our portfolio. We're really focused and excited about it. We start spending money on exploration, on development. We start building a team. We start giving it the love and attention that it really needed. Today, it's got 3.9 million ounces. It's producing, 250,000 ounces. We found this underground deposit and extending it. It's got 2.9 million ounces in resource, and we just announced the 800,000 ounce reserve. So that's going to be the next phase of growth of Cal. We're going to go above 300,000 ounces sustainably for the long time. This mine, which was originally going to close in 2024 and actually start processing stockpiles this year, is going to be going, I'd say, for the at least into the 2030s and maybe longer.
Well, it is out in Western New South Wales. Are there any challenges that you have with water and access to water out there? I mean, is that a challenge for you at the moment?
Look, it was earlier this year. There was a significant drought in Western New South Wales. It's fortunate. I think the Wangler Dam got down to 6% water. It's now at around 35 to 40%. So fortunately, there have been rains. But it did kind of teach us a lesson that we need to be much more efficient at our water usage. We've installed a twin pipeline. We want to reduce our focus on our use of fresh water. So we're looking for saline bore fields, which are not nearly as saline as the Western Australian bore fields and are not suitable for agricultural use. So they're perfect for kind of mine use. And we recognize that going forward, the more we can reduce our reliance on the freshwater sources, the better the community support is going to be and the better corporate citizen we will be.
Yeah, and I think that's very important for you as a company, isn't it? That sort of corporate citizenship. That involvement.
Look, we're about to put in our application for this underground mine, and we've got 3 of the local shires saying that they will support the development of the underground mine. It will create 300 jobs during the construction phase in central New South Wales. 100 full-time jobs when the underground mine is operating. So I think it's what the government's looking for. It's what the communities are looking for. And to be fair to Barrick, or to give them credit, the mine, which was quite controversial when it was built, because it is on the ephemeral Lake Cow and it has that bunded wall, has operated exceptionally well from an environmental sustainability perspective, to the point where the local communities really support the mine.
Great to hear. Now, before we run out of time, your latest acquisition was Red Lake over in Canada. Now, that's got to be a challenge during COVID, but perhaps not. You bought it from Newmont at the end of 2009. I think it was for $375 million US.
Did I hear you say 2009? I think it was
2019. 2019.
Unless we've missed a decade or
It's the afternoon. What can I tell you? I haven't had a chance for lunch. 2019 is your latest acquisition. So yeah, absolutely. Let's talk about Red Lake, because this is a big project.
It is. It's turning out to be an unbelievable acquisition for us. So when it was sold, Red Lake's an operation which has been going for a long time. It's been operating for 70 years. I mean, people may recall it, that there was the discovery of this high-grade zone by Goldcorp in the early 2000s, which made Goldcorp the most valuable gold company in the world. So they had this 7 million ounce ore body at 50 to 60 grams over a 200 square meter footprint, and it was like a pipe structure which went a kilometer down. So for 15 years, as Goldcorp was kind of going through its growth phase, this was a jewelry box. 50 to 60 grams, you just go there and you make incredible amounts of money, whatever the gold price.
Yeah.
And unfortunately, I think that the mine got kind of addicted to that sort of grade, because when the high grade zone ran out in 2015-16, the cost setup was really suited to that type of grade. And it's really struggled. I mean, I think Goldcorp was going through real challenges to the point where Red Lake, I suppose, felt a lot like Cal did within the Barrick portfolio. You know, never made its forecasts. It wasn't allocated the investment capital that it was asking for. So at a time when Red Lake really needed love and attention, that's a repeat, you know, where it needed investment, it needed actually to reset and restructure the whole operating culture to deal with a much lower head grade. There seemed to be this corporate imperative that said, no, we actually want you to produce more gold and spend less money. And the only way they could do that was deplete their reserves faster, stop spending on exploration, and stop spending on the lifeblood to an underground mine like this, which is development. So when we acquired it, there was a real sense on site that this mine was going to close within the next 18 months because they were just depleting and harvesting the reserves. We've come in and said, no, we're prepared to accept a lower production rate. We're prepared to invest in exploration, prepared to invest in development. In fact, those are prerequisites. And we think we can get to 200,000 ounces of low-cost gold at less than $1,000 an ounce. Then we've taken all this geological data, which is 6 million assay samples and 70 years of history, put it into a database. And instead of coming up with 2.9 million ounces, which was the last resource which was calculated and released in February, because it was always looked at through a paradigm of narrow vein, high grade, selective mining, we've said, no, we can mine this more productively. Let's not filter out and things like in the past, anything less than 15 grams a ton was not considered to be able to make it into the mine plan. We're going, hang on, 15 grams a ton to us is super high grade. Yeah. Anything less than 3 to 4 grams wasn't even sampled in the drill core. So we're saying, hang on, let's put all this data together. Let's take out these filters. We've come up with 11 million ounces at over 7 grams a ton. And we're saying this is just a recalibration of the future, because 200,000 ounces a year, as Bob Fulker, our COO, says, is going to take us 50 years to mine, which is way too slow. Neither he or I are going to see the end of that. So we need to get much better and more efficient at mining, and we're really rethinking and reimagining the future of Red Lake. The best thing about it all, Kerry, is that the team on site, again, a bit like the Cal team, are going, we just feel really embraced by this new energy that is coming through from the corporate group structure, that we're going to be engaged, and they are really embracing the change. We've reduced the workforce by 20%. People have kind of said to us, well, we wonder why it hasn't been done sooner, rather than any resistance to it. We're rationalizing the equipment, and all these things which were perceived to be really challenging and difficult. The workforce are generally saying, well, at least someone's thinking about these things. We've been thinking about it for some time, and glad that someone's doing it.
So in terms of Red Lake, is COVID impacted on any, are you allowed, so you do your Zoom meetings, you can, because obviously you can't get across there. Is everything going according to plan over there, Jake?
It's actually going better than plan. I mean, one of the important things is that we did have a lot of time we signed the deal in November, late November. We've all been across. We've had a whole integration group that's been across. So there's a deep knowledge of the asset and the people. A great thing is that Dean Fredrickson, who was really largely responsible for some of the exciting work on the underground discovery at Cal, has relocated to Canada. Dean's was retiring. He's kind of a part-time farmer, a very good geologist who we've been trying to take out of farming and bring back to geology. He did all this work at Cal. He looked at the Red Lake stuff. He said, hang on, I'm actually wanting to go there because I'm so excited about the geology.
Well, it sounds like we're running out of time, Jake. We've got 1 minute left. I would love you to just give a little bit of a roundup for our investors that are listening today about why evolution, why now? It is a cyclical business. We haven't even covered all the assets. We didn't have the time. But what would you say to investors that are listening right now about Evolution Mining right now in the cycle?
If you want an investment in a company that is exposed to the gold price, obviously, but focused on profitability, margins, cash generation, reserves per share, and ultimately value creation for you as shareholders, then evolution's your company.
And I'll finish off by saying, and bringing love and attention back to the mining industry. Jake Klein, thank you so much for joining us today. Always a pleasure to see you. Appreciate your time.
Thanks, Gary.